We're here today to get down to work of determining how our housing finance system should function. I want to emphasize that the purpose of this hearing is not to lay blame for the housing crisis, nor is it to revisit every vote taken in this committee before and during the crisis. We're not here today to merely point fingers and score political points. There is plenty of blame to go around. Members of both parties, Republican and Democrat administrations, that shunned regulation and pushed homeownership, loan originators, investors, regulators, and the GSEs themselves all contributed to the formation of the housing bubble and its collapse. We must find workable solutions that protect current homeowners and preserve the option of responsible homeownership for future buyers. There have been reports that large financial institutions are closing branches in historically underserved communities. How would each of the administration's options ensure that mortgages would continue to be available to Americans in rural and underserved areas, and that small community banks and credit unions would have access to an independent secondary market?
Mr. Chairman, this is a very important question, and it's one of the elements that we highlight as important to focus on as we're looking at the three options. We have seen, with the effects of the crisis, a significant consolidation in mortgage originations to the point where the top 5 lenders today account for about 60% of all new mortgages.
The report says that the administration believes that the securitization market should continue to play a key role in housing finance, and they agree. In the rulemaking to define the qualified residential mortgage, what appears to be the most challenging issues to address, will the agencies take sufficient time and care to make sure you get it right and to avoid unintended consequences that might restrict credit? Either of you.
Mr. Chairman, yes, we will. The entities responsible will take care in designing this to make sure they get it right. And of course, one of the great strengths of our system is they will put out a draft for comment so that all affected parties will have a chance to provide advice directly in the shaping of the final rule.
Looking at the administration's GSE Housing Finance Reform Report, it states that we need to have a plan to address multifamily mortgage finance, but doesn't provide much detail. What are your recommendations to provide for stable, liquid, and affordable financing for multifamily housing, including affordable multifamily housing and housing in rural areas?
As I mentioned in my testimony, one of, I think, the often forgotten aspects of this crisis is that we have not seen multifamily finance, and particularly multifamily finance at the GSEs, contribute substantially to their failure.
The administration's report cautions against a hasty transition from Fannie Mae and Freddie Mac in the current economy, but also recommends increasing the enterprise guarantee fees. Last week, we heard from the realtors and home builders that increasing these fees discourages potential home buyers. Some industry groups argue that these fees may drive borrowers to FHA-insured loans. By increasing these fees, are we moving more mortgages away from the private market and toward FHA?
Senator, first of all, I would say, and I want to echo Secretary Geithner's comments earlier, that we do, under any of the options, have to recognize that there will be some increased cost for mortgages. I think if you look back at the system that we had, there's no question that we underpriced risk and took on risks at the interest rates we provided that we weren't prepared for.